Good evening. I thought I'd give you a follow-up on the recent activity in the market. Again, this is for educational use only, not to be considered a recommendation for trades. As you can see here, we have the dollar index, DXY, and the dollar continues to show weakness against the basket of currencies. As the dollar continues to show weakness, the precious metals are responding appropriately. This is gold. Gold futures moved up this evening. They touched 1960 and gave back down to 1955. We added a second position as per our protocol, and so our average price now is 1945. I'll show you silver next. Silver, I didn't add a second position because I now have enough exposure to the precious metals. So our present purchase price for the silver was $24.62, and presently it's $25.82. So we're solidly in profit on both gold and silver. In addition, this evening, following our protocol, the S&P 500 E-mini futures spiked up, which triggered our entry. Again, we are above the Ichimoku. We broke the trend line, and now we have crested the previous high. So we triggered in at 35.40.60 actually, and presently the price is 35.51. In addition, we had a buy order on NQ, and that triggered also the same criteria. We're above the Ichimoku. We were above the trend line. If you drew the trend line, you would see we're above it, and we crested our previous high. So we triggered in at 12,250, and we're presently at 12,332. The trades are all positive right now. The stop losses have been set based on the criteria I described earlier, and we're just waiting for them to play out one way or the other. One of the concerns about trading is once you find the entry, the question is, when do you exit? There are several ways to consider the exit point. The first way is if you have symmetrical triangles, the technical analysis shows you that there are expected targets, and those targets are represented by the changes previously in the triangle. So in this case, the maximum change in the triangle would bring us up to 2028 in gold, and that's the final target, and the intermediate target is 1975. One of the things you can do is you could consider closing the trade at the final target, or you might consider taking partial profits at the intermediate target and holding the trade for a runner. The other thing you can consider is just following the Ichimoku. If you think that the trade may turn into a trend, then you don't want to close out at your targets. You want to stay in and see if the trade produces a home run. This is not uncommon. It's rare, but it's not uncommon. And if you follow the way of the turtle, they will tell you that sometimes their entire year is made on one or two trades, and the rest are mediocre profits and losses, but one or two trades will produce all their profit for a year. So you don't want to cut a profit short if you might produce a trend. You don't know what's going to happen, so you have to make a decision as to which methodology you wish to follow. I tend to try and take a view of things like gold and as a long-term positive, and therefore I will not close out if we hit our third target. However, if we hit our third target in a parabolic move, then I will close out and I'll consider re-entering at a lower price. If we grind higher slowly over the next few weeks to months, then I will just raise my stops and stay in the trade. I wanted to go back in time to end of July, beginning of August, when gold produced a trend trade. And I want to show you my technique for exiting a trade if there's a trend trade. So normally we use the Ichimoku to determine the entry on the trade. In this case, we entered the trade on the break of the trend line. It would be here. Let me put that in for you. Well, anyway, the trend line would be here, so we would have gotten in. We were above the Ichimoku, and we started riding this trade upward. Now, the Ichimoku is a trend following system. It basically allows you to stay in the trade as long as it continues to climb. It implies that the trade will continue to be profitable, and when you break the Ichimoku, that's when you would get out. Now, this is our entry Ichimoku, but I don't use that for exits because I find that too aggressive. So what I do is I have a second Ichimoku which has twice the period of the standard Ichimoku. It's much slower, so it tends to keep me in trades longer. And so if I don't have a price target based on symmetrical triangle targets, or if we grind up slowly and we make target and I feel like there's more to be had because the trend continues, then I'll use this secondary Ichimoku as my trade exit point. And as this trade I took, we went all the way up to 2090, and then as we came back down, I had moved my stops up, and I got stopped out around 2004, which is right about where we touched the blue Ichimoku baseline. So I use that as my trade exit point. If sometimes the trades will continue on, they won't ever touch the Ichimoku. Sometimes the trade will come down and it'll touch the Ichimoku, and then it'll go back up again. So I try not to second guess my system. So what I do is if we touch the Ichimoku, I close, and I just wait for the next setup. I hope this is helpful to you. It's one of trading system I found to be successful. I've been doing more studying about trading, and it seems that the most successful traders also use a much longer time frame than a day trader or a week trader or swing trader. Their time frames range from 8 to 30 weeks. So that seems to follow well with the system I use. I thank you for your time. Have a good evening.